We've got ourselves a Fed meeting! Woo! Who's ready for this? So we've got a few things we're going to talk about here. We are waiting for the rates. They're going to come out at 11, so about 3 minutes left until that happens. We had a little bit of a rebound so far. It was basically down all morning. And when it was sitting right here, like 9:30, I was like, maybe I should grab some calls and see if it comes back up towards VWAP. And I just didn't do it because I wanted to wait for the thing. Well, bam, would have been up a few bucks already. I could have dumped out of that and had a nice little day trade before anything even happened. Labs, how's it going? Thanks for joining us. We got one heck of a day coming on right now. I might make a trade. I don't know. Let's see. Now, hold on a minute. Either I'm crazy or today isn't Sunday. You're right. It's not Sunday. It is a Fed meeting on a Wednesday morning. When there are Fed meetings, there are chances to make day trades. For me, I'm not much of a day trader, so it's actually nice to be able to have that opportunity. I don't know if we're going to get that today. See, that all depends. Ooh, 59. So we're going to be here in a few seconds. We're going to get the rates. We shall see things start to move really quickly. In fact, I am going to zoom in a bit. Any minute now, we're going to have, I should say any second now, we're going to have the rates come out. And it's going to say probably 75. So Chef Brandon has predicted 75. Would you comment up here? So my prediction, 75 basis points in a normal light sentiment or statement that pushes market into 390, that varied hawkish conference that pushes down to 380. So maybe there might be some light dovishness or some hawkishness. That's exactly what I'm thinking too. Because they can't get too dovish, right? Here we go. 75! Woo! All right. It's exactly what we thought. Here goes the market. Look at that candle. We've got some action going right now. It's pumped up. It came down below VWAP, and it is bouncing. What are we going to do? I think we're going to go green for a little bit and then probably settle, because usually what happens is we go a little green, a little red, and then we settle in some range before the speech actually starts. So we've got a half an hour until the speech goes, and right now it's just sitting around here at VWAP. Look at this going. In fact, eventually there's going to be some more news. Oh, here we go. There's a pump. See, spending, job gains. It's exactly what we thought. The job market's going to be an issue. Unemployment is low. That's what we know. That's kind of the sticking point right now. So let's see. Oh, my God, this is intense. Yes, it is. We've got something going. Man, I really wish I bought those calls. I could have dumped. This is exactly what happened last time. It had this nice big green candle. And actually, last couple of times, and I think 2 times ago, it's got up to about here, and I decided to buy right here. And boom, it just crashed until the rates came out, and I was able to average down a little bit and make something out of that trade. But I just don't get involved in this first candle, even though I expect this exact motion right here. Don't know if it's going to continue, but usually it comes back down. We'll see. These are 3-minute candles, so every 3 minutes we're going to see a new one, and it should hopefully give us a little trend and then settle. That's what we're waiting for. So we got some more Fed votes in favor of decision was unanimous. 75 basis points was a unanimous decision. But that's important. So we wanted to know what they thought of the 75 basis points. If it wasn't, if there were a few dissenters that wanted more or less, that would tell us something. But they're all on the same page right now. I mean, a few months ago, the votes were much more split. I mean, it was usually a majority wanted something, but there were a few dissenters. But the last couple have been right on. They're all on the same page on this. They know exactly what they're doing. See, my thought was 75 was likely. The market's expecting 75. There's not really a reason to go above 75 because 75 is high. 75 is an intense rate hike. I just read your text right there, Plabs. That's why I said intense. It just popped into my speech while I was talking here. But 75 is a big rate hike. We don't get those very often. You have to go back quite a ways to see 75 basis point rate hikes. And if you think about it, this has been going on repeatedly this year. This is like the 4th 75 in a row. And before that, we had a 50 and a 25. So we're really pushing this. This is intense. I mean, they're doing a lot more than people think. Like, I keep hearing all this talk, like, we need to do 100, we need to do 75, they need to be hawkish. And then there's these other people that go, oh, they need to cut rates and pivot. Like, no. All right? No. Yeah, I know you want them to cut rates because it's going to make stocks or whatever you own go up. So that's what you're thinking about. You're thinking about yourself, like most people do. But if they want to get everything fixed for the country and the world, they need to make sure that inflation is taken care of. They can't back off too quickly. They don't care what your portfolio looks like. They care what the price of milk in the store is. That's what they're going for. Not so that you can get rich. Man, I really wish I bought those calls. I'm pumped today. Sorry, guys. It's just kind of how it goes. I'm a little bit excited, but I'm also mad because I'm missing out. I really did think about buying those calls back here, like literally at this spot. It was like 9:30, like 9:20, 9:30, and it hadn't started going up yet. And I think it did a little bit, and I went, oh, here's some green. Maybe I'll wait for it to keep going down before I get in if I do. Like if it had come down a little bit more instead of pumping up like this, I probably would have gotten in some calls and just sat in them. But man, look at that. I could have made some money on that. Got to trust your intuition sometimes, but it's not always right. Major indices are lower. That's the old thing that's coming back up. The Fed says, get this out of my way. I can't even click on it. The Fed says job gains have been robust. Unemployment rate has remained low. Yes, we know that. That's the important thing. Inflation remains elevated. Says anticipates ongoing interest rate increases will be appropriate to attain a sufficiently restrictive policy stance to return inflation to 2% over time. That's exactly what I was saying. Hey, puncher of kittens, what's up? Glad to have you in here. We're getting crazy with this rate hike, and the fact that I missed out on something that's might be coming down now, which I wouldn't be surprised. It usually kind of does. It has to settle, not has to, but it usually kind of comes towards VWAP somewhere because people are unsure of what Powell's going to say. He could come out with a surprise because now that we know what they're thinking, now that we know it's like all about employment and just the basic inflation numbers, we have to wait till Powell comes out and gives us his tone because he's going to be the one that says like, all right, you know the information, so here's how we feel about it. We're giving you the technicals, now we're giving you the emotionals. I mean, they're giving you more technicals, but there's still emotional stuff involved in what he's about to say. What do we got here, Chef Brandon? The committee anticipates that ongoing increases in the target range will be appropriate in order to attain oh, that's exactly what I just read. Yes. I was reading it off the other thing. I didn't realize you posted it in there. See, we're on the exact same page. That is important right there. That's telling us that they're going to hold rates. There's not going to be a pivot, right? I keep hearing all this pivot talk. I'm thinking, why? Why would you pivot? We got 8% inflation. It's been slightly coming down each number, like point something percent each time. So it's not really that much of a drop. But it is something. It's not, you shouldn't ignore it. Like all the bears that are thinking the world's over, like, no, it's still something. Like if inflation goes up in the next reading, yeah, that's we can see that. That's totally possible. But right now, it's kind of like what I'm considering it stable. It's flat. So it hasn't been going up, which is the good thing. And there's going to be some effect to what the Fed has been doing. The Fed has been making it more difficult for companies to borrow money, which is the reason that stuff goes up in the first place. Not just margin, but borrowed money in general across all markets. If you have assets, okay, like let's say you have millions or billions of dollars worth of assets, you can borrow against that. And not only can you borrow against that for the value of the asset, you can borrow against that above the value of the asset. So you can get ridiculous amount of money off of your assets to put into other things. So there are entities that have tons of assets, and sometimes these assets are just stocks, bonds, they're paper, right? Sometimes they're just paper. They don't have to be physical assets, but anything that is worth money that they can borrow against will allow them to add so much more money to the system over time. That's how money comes in. It's borrowed. Borrowed money comes into the system, and it's basically what you call printing. Right. And that also tells you that it's economic activity. So it's not just the fact that money's being printed. It's a measure of how much economic activity is going on and what businesses are actually thinking and doing. If businesses are borrowing, they feel confident. They want to expand. They have ideas and they think whatever their idea is will work. So they're putting money into it, which is a sign that the economy is good. And the Fed is looking at that thinking, okay, the economy is good because people have jobs. But the problem is prices are too high because too much money has flowed into the system and not enough restrictions have been put on that money while it was happening. See, you can do all the stimulus that we did. You can throw trillions into the economy if you do it properly. But we didn't. We just threw it around. It was all political. It was like, all right, let's get people money because they can't go to work, which, yeah, I mean, if you're going to force people not to work, you got to take care of their needs or you have to give them a way to pay for themselves, which that's what the stimulus was supposed to do. But what did the stimulus really do for the average person? Like, you got a few checks. Yes, that was nice, but it wasn't enough to live on throughout the time that everything was closed. So the businesses that got money in that sense, though, they were able to expand. They were able to pay workers. So some workers were furloughed. I mean, there were just so many ways to get money to workers, but not everybody got it. And the disproportionate amount of the loans allowed other people, big entities, let's say, to increase prices even more. There were no restrictions on that. So they were able to pump the price of everything else up. And it's not just the market. You have to think commodities are things that we use every day. Commodities are traded, and if traders that are doing that have enough money to outbid everybody else when there's a shortage, that can push prices up. And of course, if there's a shortage, that means demand is outweighing supply, so there's going to be a price increase too. And here's the big point I want to make with everything. I'm kind of rambling and going all over the place, but the Fed works on demand. Now, Powell says this all the time. I say it all the time. It's obvious. Yes, they work on demand. They don't have the ability to affect supply directly. They do it indirectly through demand. So what I realized the other day, this was kind of an epiphany to me. I was listening to a CEO of some company. It was a real estate company. I can't remember which one it was, but she was talking about the demand in the housing sector is still there. She said, yes, prices have come down. There's still somewhat of a shortage, but there's demand. So my thought is, forget everything else. Forget the numbers. If demand is still strong in certain areas, the Fed is going to hit it harder. The Fed is trying to cut demand down, right? They want prices to go down. They want all this stuff, but demand is the thing they can affect. And the more you see it, even if prices are up or down or whatever people think, the more you see demand, the more likely they're going to be to crush that demand. And the housing sector is one of the big problems. It's one of the biggest things in the United States. You got to live, everywhere in the world. You got to live somewhere, right? Somebody owns that. Somebody has to live there. You're either owning it, renting it, or it's available for whatever. And if there's a shortage of things to buy because, well, think about all those companies that bought up real estate during the pandemic, right? They're like BlackRock, Vanguard, all these companies. They were buying houses hand over fist because they knew it was a good investment for later. And it's not just them. Everybody else, people were moving out of the suburbs. Prices were getting jacked up like crazy. So there's a difficulty with dealing with demand in an economy that has a shortage of supplies for homes. That is, when you have a shortage of supply, demand is very difficult to reduce. And the only way they can do that is through the money. So what do we have here, Chef Brandon? We've seen demand still high. ADP jobs report came out much higher than anticipated. Unemployment is low. Exactly. So that's why all these people that are saying, oh, it's going to pivot. No, he's not. I don't like making definitive predictions here, but I don't see the Fed pivoting right now. They've even been saying for the past couple of months, we're going to raise rates and then we're going to pause, right? And then some reporter comes at them with oh, well, are you gonna pivot and blah 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 blah, and they're like, no, we're gonna hold it until the prices come down. It's very simple. We had Goldman Sachs the other day saying that Jerome Powell is going to come out with quote pivot language. Now he might, all right, he might come out a little bit dovish to relieve the pressure a bit. But the problem with that is if he does that, things are going to rally. Prices are going to get there's going to be pressure for prices to go up again. Anytime there's pressure for people to borrow money and get into markets because they're rising, there is the chance for inflation to go even higher until we have cut it all the way down. Money needs to be removed from the system. Stuff needs to get destroyed. Feet of steel. Yes, exactly. We got to have, not just everything of steel, man. I'm ready for this to last. I'm ready to get hurt. I'm ready for this whole market to just beat me down. And you know what? I'm going to get right back up. I don't care. You can beat me up as much as you want. I don't care. I've seen enough of the market to realize that even though these things suck and they could go on for years, chances are they're going to rebound quicker than you think. In fact, there was a study, I'll probably talk about this more on the stream this weekend, but there was a study saying that markets usually rally 4 to 5 months before the economic data bottoms, right? So once the data actually gets to the point where the Fed is comfortable and wants everything to be, and thinks everything's okay, the market has already started to rally from that point, because there are going to be people that tell you it's over for the entire time. Yeah, so they're working on demand. We've got a Fed that's going to be probably hawkish still, but I don't doubt the fact that they might come in a little bit dovish because they don't want to scare people too much, right? If they cause a panic, which actually I would love a panic. I just want the end of the year to be really down. But if they cause too much of a panic, institutions can pull their investments, make things a lot worse. The other thing is the Fed is actually losing money now, right? For the longest time, they were making all this money. I didn't realize this, but the Fed gives the profits to the U.S. Treasury to help with the deficit. Okay, I'm tired of that noise. That beeping is really getting me right now. Skip whatever song this is. So, anyway, we have rates. We have a trend that's coming in right now. Let's take a look at the news, see what I've been missing while I've been blabbing. Let's see. Fed says war in Ukraine is creating upward pressure on inflation. Yeah, duh, we know that. Let's see. The Fed says it will take into account cumulative targeting, policy lags, and economic financial developments in determining the pace of rate hikes, i.e. stuff that's taking a while and how intense they're being with their moves. Policy lag is extremely important because everything takes a while to take effect. It's not like they cut the price of money and everything goes down right away. There's still money in the system. There's still borrowed money that people already have, and that money needs to work its way out before they can relax a little bit. So that's what they're doing. They're trying to say, okay, let's get this going, hold it for a while, and as the money starts to come out of the system, then we can think about changing our trajectory. So that's the other important thing. All right. Are they going to continue with the trajectory they said last time? That is a big one. If they're on the exact same track and nothing has changed, like the dot plot stays the same, then we could have a nice little rally right now. I mean, I don't know how long a rally would last because we still have the elections going on for the next few days. I think up until the 10th or something. It said you could turn it in then. I'm not sure, but so I guess my next broadcast is going to be before all that. So we still have that for the next few days at least. So that could cause some volatility and could cause some hesitancy. But there are still tons of shorts. The narrative that I bring in every single time, it reigns true. There are people that are way more negative than they need to be. They short the hell out of the market, and then when Powell comes out and doesn't say what they think he's going to say, the market rallies and they have to cover. And of course, once that happens, the bulls like me that are waiting for this are going to jump on that and make it worse. The question is, what is Powell going to say? If he's in line with what he said before, positive, it could pump. We already got the 75 basis point rate hike. That was what we wanted. So that's the other piece of the puzzle. Now we have to say, how hawkish or dovish is Jerome Powell going to be? So you got to give him a few minutes into the speech to let him say, like, okay, we're going to do our thing. It's all normal, blah, blah, blah. And if he says, oh, but we're going to do all this other stuff that we didn't tell you about before, that could be negative. I seriously doubt that's what's going to happen. I think he's going to come in and try to be somewhat positive, but not too much, because he doesn't want to pop the market way too much. He doesn't want to pop anything. He just wants it to kind of bleed into the rest of the year and let prices drop, let that money exit the system so we're at a more reasonable state. Okay, say Russia rejoined the grain deal with Ukraine, will help inflation. Lumber coming down. I fear we're going to see stock buybacks paired off with layoffs soon. 3 to 4 more months of this until we see a pause in rising inflation and rate hikes, in my humble opinion. That's a lot to unpack right there, Chef Brandon, but you make a lot of good points, right? So the Russia grain deal, that's big for commodities. Food prices have been crazy, but Russia and Ukraine are both exporting huge amounts of grain, and they have for a while. So that's actually extremely important to the price of everything. If they cut that, because I know Russia was talking about just cutting that if certain demands weren't met. Are you saying that it actually happened? Because it was still kind of unclear this morning when I was looking at the news, but I haven't really checked up on that yet. Lumber's a big one. Obviously, since there's a shortage of housing, building houses is extremely profitable, so all these companies want lumber. And if lumber is coming down, that means the cost to build these things is coming down, which is good. That's the problem with inflation. So you believe it happened. Okay, well, we'll hold that for now. Well, I'll probably see it in the news at some point because they're going to talk about it. That's important. But yeah, so there's that. There's the lumber. There's the grain. It says we got some more commercials coming up. That seems really quick. Just had commercials. What's going on with this? I need to start doing this manually more. I want to blab. I don't want to do all this. They just say you got to put the commercials in. I put in the fewest I can, and we go from there. So what time are we at, real quick? 17. So we still got about 13 minutes until Powell comes out. So we've got, what was the last part of the thing you were talking about here? So, okay, well, I fear we're going to see stock buybacks paired with layoffs. Now, that's an interesting one because stock buybacks are kind of in the spotlight right now. There was a bill banning Congress from being able to buy stock or something like that a little while ago. I don't know what happened to that. See, that's the whole thing. They put it out there and they make you go like, oh yeah, we're going to do something about it. And then it just sort of fades into the ether and nobody cares anymore. And they forget about it until 3 years later when they're like, oh, you shouldn't be able to buy stock. Like, all these people did, like Nancy Pelosi and Nvidia and all that. Like there's so many reasons why they should, but that's what politicians do. It's not just stock. I mean, all the narratives you see are, one, to keep them in office, and two, to keep their financial needs and their power needs going, right? They want to feed you narratives that keep you beholden to them and keep you looking to them for information. So anyway, I'm getting off on a track here. Companies with layoffs and buybacks. That is a possibility. However, I think there's going to be a tax on stuff like that next year. It might be starting next year, or maybe it's starting in 2024. I don't know, but there's something talking about buybacks and especially just sales of stock that they're going to tax a little bit more to make some money, which is not a big deal for the smaller investors and traders like us, but it actually could impact the larger entities. So that's going to affect how they do things. Now, if they do buybacks, they're probably going to want to do it at a time when they still can, which this year would be it. So that's my other thought is, like, if they want to get their buybacks in this year before it becomes more expensive to do so, we could get a rally based on that. And my thought is, I think people are like me, are waiting for the end of the year. They're waiting for a tax loss selling dip and a possible Santa Claus rally. I think that's extremely likely. We still, if you look at the long-term trend, have that ability. But at this point, I don't know. The Fed, we're thinking about short term right now. The Fed's going to come out. They're going to they already made a decision for most of it. It's in line with what we thought. So we have the first part of that, right? Now, the second part is Powell. We're waiting for Powell to come out and tell us what's going to happen, what we're going to do about it. But once that happens, if we get a rally, we get a dip, we get it to go sideways, whatever, eventually the volatility from that's going to settle. and the trend is going to continue again. So if we get this nice rally from this, if it's too much of a rally, we'll get a crash because people are going to say, oh, I need to take profits, we're up too much. But if we get this nice, gradual, kind of sustained rally, which I think is a possibility, that would be a little bit more strong. And that would tell me that it would be harder for the market to bottom before everything goes out. But for now, we're just waiting on Powell. So let's take a look at this trend here before I finish the news and then turn this music off. We have slowly started to settle towards VWAP. Isn't that what I was saying earlier when it was pumping up here? I said we're probably going to have a trend that trends toward VWAP, and that's what it's doing right now. It's staying above it because so far everything that's come out is in line with what the market was hoping. So the shorts are scared right now. The shorts are feeling really good at the beginning of the day when everything was kind of trending down for the first few hours. They thought like, all right, here we go. But that kind of thing gets people to cover. And I think this, if I back this up a little bit, I think this right here was possibly a covering rally because people are way up. They're down below VWAP. They know that the trend isn't going to stay for long because it is a Fed day, right? Fed days don't usually have an extreme trend that goes one way and never stops. It's usually a back and forth because people are unsure. You know, if people make too much money in one way or lose too much money in one way, they switch their direction, or they, you know, dump their stock or whatever it is, and it starts the wave back in the other way because you don't want to be too far out. If you're thinking down and the Fed completely squeezes you out, you could be in serious trouble because there's no limit to the amount that you can lose when you're shorting stuff. So shorts are they know that they have a chance today, but they're being careful. And right now they're hurting. Hopefully they got out and they took their things here. But what usually happens with people that don't know what they're doing, they get this big pump, they get scared right here, and they either dump or they average up a little bit. So there are shorts that could be averaging up, which means they're taking on more risk. And then there are bulls that were getting into this, but they took money because, I mean, look at this. This is a huge candle. We opened at 272 and we peaked up at 278. Yeah, if you're going to get that really quickly within 3 minutes or less than 3 minutes, you take it. You get out of it. That's a massive gain. I don't care if you consider it scalping or not. That's still something to take. Like if I had bought the calls right here like I wanted to, I would have dumped them. I probably would have dumped them like here. I mean, it would have been up enough to have been like, all right, I'm going to dump this and get out. And my theory was right. Like it kind of came down. It's going around. But look, we're bouncing again. You know, so this is what happens. So what do we have on the time here? We have 11:22, 8 minutes left. So we're getting up to that. Is anybody else making a trade? I'm thinking about it. I don't know if I'm actually going to. I've been thinking about this for weeks now, or actually probably a month or two. However long since the last meeting. After a few days after the last meeting, I'm like, all right, time to start thinking about the next one. But I've been really thinking about it. Like, I don't know. You know, it's everything's going with the way that I thought it would and hoped it would for a trade. But I'm still just extremely nervous to do it. I mean, it's just the last Fed meeting spooked me. I mean, I made money. It was one of the better trades that I had, but I got out like right in time. I mean, right after, you know, when I got out, it just started going down. It didn't really recover for a while after that, which told me that there's still a lot of skittishness in the market. And, you know, if there's skittishness, I don't like being in positions for too long. I want a nice confident jump up. So what do we have down here from Chef Brandon? I got my money in gold ETF and cannabis right now. Oh man, so you're feeling the pain like me, man. I'm in cannabis. Luckily, one of the things I'm actually in is Canopy Growth, which had that nice pump because they're opening a holding company here in the USA. So I took that as a chance to get rid of all my 2023s. But I'm still in cannabis in general. I'm just down huge, man. It's painful to look at cannabis. Now gold, so that's an interesting one. If the market pumps, gold will most likely drop. It doesn't always happen. But right now, because number one, gold's a commodity, and number two, it's still a good store of value, and number three, it still has uses. And even though it's tied to the market, it kind of has a mind of its own sometimes. So gold's okay, but like I can also see that being painful if the market pumps, you know. So I think gold is probably after a rally. If we get a little rally here, gold is probably not a bad thing to be in as the rest of the year comes on, because we probably will trend down. I mean, there's still, like I said, this is just relieving the pressure, right? There's people that are talking about pivots. There's people that talk blah, 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 blah. We have to let all that stuff work its way out of the market. The people that are thinking about the short term and thinking about just the market and not everything else, they're going to get massacred in this upcoming set of volatility because they're going to be so convinced that it goes one way that they're not going to see the fact that this is going to move around, right? This isn't going to be one continuous direction. We don't have the fuel that we had in 2021. Like if you got in the market in 2021 or 2020, we had the lowest interest rates we've ever had. We had the Fed was buying junk bonds from corporations, i.e. bonds that companies put out when they're kind of in trouble, right? They put it out at a higher rate. That's why it's a junk bond. It's like, all right, you're going to take on a lot more risk to get this bond, but we're going to pay you more because we're confident in ourselves. So some people are like, hey, I'll take the risk on that. And the Fed's like, well, we control the money anyway, so why don't we do it? So they decided to do that. That's it. We've never done that before. So any company that was able to do this could have just been like, I'm in trouble. I'm going to sell a bond to the Fed. And yes, you're going to have to pay that back and with the interest and anything. But if you can get the money and use it wisely, you might be able to pay it back and still be profitable. And that's what these companies are thinking. So, nice. I think we're going to see a cannabis spike. I think the Dems will push for national decriminalization soon and rescheduling. And the other thing is Republicans are not as against it either. That's why I like cannabis. Like there was a poll a couple of years ago that showed a majority of the country is in favor of cannabis. And I think that's because the stigma of it has been destroyed. I mean, we lived in the era of reefer madness and all that stuff, and people were going crazy on, oh my God, they're going to jump out of a window when they use some cannabis. It's like, no, that's not what cannabis does. It has so many uses, and not just like people smoking it to get high or eating it or whatever. It helps medically. It can help with pain. It can help with anxiety. It also has industrial uses. Like if you use the hemp portion of it, you can make paper, you can make rope, you can make lumber, blah, 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 blah. There's so many uses for it that I just don't see why it's not a good buy for the future. Yes, it's illegal federally right now. That's fine, right? The landscape is changing, and eventually it's going to move because people are going to see, like big companies, the people that are blocking this stuff, eventually they're going to realize, wait a minute, if we let this be legal, we can actually make more money because we can produce more lumber, more paper in the same square footage with like in less time. So why don't we just do that instead? And instead of trying to fight it, they could just go in for it. I think at some point, the money, the actual greed aspect of it is going to cause people to flip around. But for right now, it's a house of pain and it sucks. But that's what we do here at the Stock Pack. We are masochists. We love to get beat up. Why? Because that's when people leave. You got to take the punishment so when you come back in, you'll be lifted up by everything. You won't be chasing it. You won't be trying. It's like we're going to the gym in the wintertime and we're training for the next season. We're ready to get on the field and do this. So what do we got right now? Time. Hey, Kijiji! It was made illegal because lumber was the prime commodity. Man, there's so many reasons why it was made illegal. I could go on for days about that. It's ridiculous. So what do we got? 2.5 minutes. Ooh, we're getting there. Let's see. Sloan Fishby. Big Pharma has historically been the big blocker of cannabis, but you're starting to see CBD and Delta-9 at Rite Aid. Yes, exactly. And also the cartels. Right? The cartels make so much money. They don't want it legalized. I mean, there are millions or billions of dollars in the cartels, not just the other drugs, but weed itself. So they can use some of that money to block its legalization to keep their profit going. There's so many industries that don't like it. But the problem is they could actually benefit from it. Big Pharma could benefit. Lumber could benefit. Everything could benefit. All right, less than 2 minutes now. Oh, man, I'm getting pumped. All right, 15 seconds. Are you ready for this? Of course, Powell's going to come out a little bit after that. So I'm going to go quiet when this goes on. We're just going to listen to it. I may or may not make a trade. We'll have to see. This is a complicated day. So get ready. Oh, here we go. All right. Are you ready? You better be ready. J-Powell! Woo! Let's go into the options here. Where am I going? I don't want close dated. I want like the next one. Oh, here we go. All right, I'm in. I might be a little bit early, but I'm in on the cues.
The ultimate level
Ouch.
of interest rates will be higher.
I'm getting murdered right now. This sucks.
Activity and inflation.
Fuck you, Powell. God damn it, dude. I am getting murdered. Ouch. Give me a pop. Shit. VWAP is our resistance right now for this. Oh, man, this is crazy. I'm about break even. I'm still down, but I'm considering just getting out of this because this is too much. This is way too intense for me.
PCE inflation will publish an assessment of underlying inflation.
How about underlying go up? Get off of VWAP and go up.
Is inflation becoming entrenched?
No.
I guess I would start.
He's saying what he's supposed to be saying. We should be popping a little bit more right now. I think people are just super uncertain.
Hi, thank you for taking our
I might just get out of this and take the loss.
Washington Post. The statement points to the lag times.
I'm not sure yet, though. I'm in denial, all right? I'm in denial. I want this thing to bump. I'm down like 20% of all my free cash. I need this shit to go fucking now, dude. My guts hurt. Let's do this. I love the pain, but, man, I'd love to get some money even more.
And, the truth is we don't have a lot of data of inflation of this high in what is now the modern economy. One big difference now is that it used to be that you would raise the federal funds rate, financial conditions would react, and then that would affect economic activity and inflation. Now, financial conditions react well before, in expectation of monetary policy. That's the way it has moved for a
Holy
quarter of a
shit, he's
century
dropping
is in the
fucking
direction of
knowledge
financial
right
conditions,
now.
then monetary policy, because the markets are thinking what is the central bank going to do, and there are plenty of economists that also think that once financial conditions change, that the effects on the economy are actually faster than they would have been before. We don't know that. I guess the thing I would say is it's highly uncertain. And so from a risk management standpoint, it would be irresponsible not to ignore them, but you want to consider them, but not take them literally. So I think it's a very difficult place to be, but I would tend to want to be in the middle, looking carefully at what's actually happening with the economy, and trying to make good decisions from a risk management standpoint, remembering, of course, that if we were to over-tighten, we could then use our tools strongly to support the economy. Whereas if we don't get inflation under control because we don't tighten enough, now we're in a situation where inflation will become entrenched, and the costs, the employment costs in particular, will be much higher potentially. So from a risk management standpoint, we want to be sure that we don't make the mistake of either failing to tighten enough or loosening policy too soon. Very premature, in my view, to think about or be talking about pausing our rate hike. We have a ways to go. Our policy.
All right, he just murdered my call. Thanks, pal.
To get to.
Somebody ask a dovish question. I just want to get out with something close to break even. Holy fuck. I just got out, probably at the bottom. Took a big fucking hit, dude. This sucks. This is my first loss on a fucking Fed meeting this entire year. God damn it.
You see from our
I love it, though. I love it.
Take some time.
Okay. So that was a pretty big disaster. I didn't feel comfortable getting in where I got in because we had that massive pump and it stayed. I didn't really like that, but I was thinking maybe we get a little more. My gut was telling me this is not the time, but it was just, I'm just used to going in right at that time. So this was my first disaster in this whole thing, and that's okay because it does happen. When you see a pump like this, we've got an uncertain economy right now, or we've got an uncertain market. We've got this nice pump already that held, right? It didn't even get to VWAP. It was trending towards VWAP, but then it kind of came back up. I was in somewhere, let's see, 1127, 1130. I was in somewhere on this candle because I got in, I was up like, I don't know, $80 a contract or something like that. It was kind of sitting there and I was thinking, all right, we have a chance to get a little more. If I got to $100 a contract, I was just going to dump. So I was hoping it would get maybe up to like right here. It just needed to go a little bit higher. I would have dumped and then it would have been fine. But look what happened, man. I rode this all the way down. I saw this pump coming up. I was talking about it hitting VWAP and that being kind of resistance because that's what, you think when you're a trader and you're uncertain. VWAP's kind of the area that you can feel somewhat confident in. If you get up to it and you made money, you can dump out. If you shorted it and you get down to it, you can dump out. But I held thinking maybe this would be a bounce because we had this nice crazy drop. I was thinking, all right, maybe it'll follow VWAP and just kind of settle in this area. And oh no. What is my contract at right now? It's not that high. Okay. All right, so I lost like almost $200 a contract in the end right now. It's pumping. It's up probably about 40-ish bucks from where I sold it per contract. And it looks like this green rally, which I kind of thought might be the actual return to the area that seems normal. I'm kind of thinking this trading that was going on today it might be where it finishes. But man, that hurt, dude. And I definitely sold out at the bottom. I mean, it wasn't the exact bottom. It went a little bit lower, and I felt for a little bit, I was like, oh, good thing I got out when I did. But now it's pumping. I considered getting back in when the contracts were like right in here. I thought like, man, I should probably get back in and just see if I can get it. But I thought, no, my luck is telling me this is not the time to do it. I've been having bad luck lately. I've had really, really good luck this year. I've been seeing things pretty well. I've been getting in and out at the right times. But for the past like couple of weeks, maybe even month, I've just been getting destroyed on every trade that I make. Every single trade is hurting me. It's painful right now. Like oh man, that's too bad. It's also I was just kind of hoping that I would get to I would get to like the end of the year and have, 100% trade on every Fed meeting, be like, all right, I did it every time. But you know what? It's about time. I knew eventually I was going to lose one. I thought today would be the day, especially like, here's the thing though. At the beginning part of the day, everything was lining up properly. It was a nice downtrend. All right, let me back this up so we can see this a little bit better. So we had this nice downtrend. I was very confident in that. I thought, okay, downtrend is good for a pop. This pop that stayed on the rates was the thing that weirded me out. If it had come back down and settled in here, then I could have taken a nice pop up here. But it got up here. I got a little bit of FOMO when it started to come back. I thought, okay, maybe it's going back to the previous high. He's saying everything's in line. This should be good. What he's saying is what people wanted to hear for the most part. I mean, there's a lot of people that wanted more or less or whatever, and there's going to be a bunch of talk about it, and who knows what prices are going to do after this. But it looked like it was a possibility. I thought, okay, it's good enough to where I feel confident at least giving it a shot. And at first I was up, and I did actually think when I was up about like 70, $80 a contract, I thought like, I don't like the way this is going right now. I mean, Powell's saying what he should be saying, but I just don't like the fact that it's kind of topping out and it's having these huge swings up and down. I almost got out, and I really, really wish I had. And then it came down, and when this green candle came in right here, let me zoom back in. When the green candle came in at this point, I was like almost to break even right here when it's popping over VWAP. And it was, or actually, I think I might have even been at break even. I thought like, all right, I'm at break even. Maybe this is my chance to actually get a little bit and then get out of this thing. Nope. It just, oh gosh, this was the candle, man. This was the death candle right here. And look at what happened. You get out the bottom. This reminds me of Bitcoin all over again. I got out at the very bottom of Bitcoin in 2018 in December when it got to a really big low. I mean, I'd never experienced anything like that. And literally the night that I jumped out of it, it started popping up. I think it may have gone a little bit lower or something after that. Or maybe it was before. I don't know. But I do know that the drop lasted, or the pump came right after I sold. Maybe it was day after, maybe it was like, I know that night it was pumping because I remember seeing that big red candle dumping and then watching it just kind of trend up slowly for the rest of the day, which was heart-wrenching because I mean, I had like half of my freaking cash in that at the time. I mean, I put way too much effort into, and that's actually probably the main reason why I missed out on that big rally in 2021. I got burned so bad by crypto that I was just afraid. When it pumped back up, I was adding to it, not as much as I should have, but when it pumped back up to like 12K and it kind of sat there for a while, that's where I dumped a big chunk of my Bitcoin, because at that point I was actually up. I know I took that huge loss. I lost half my cash right away, and I don't even remember how much I sold at that time, but I know once I did, I thought, all right, this has been sitting here for a while. I'm just going to dump it. And I think I started buying again later, but during that pump, and I never had the amount that I had at the beginning. If I just held that, right? If I just held that right through and didn't dump any of it, I could have come out with so much money. I'd be retired right now. I'd be gone, some island or whatever, but no, I just missed out on like every chance that I ever had to do anything big with money. So now what do? I play it safe. And that's what I talk about in my stream. I'm like, play it safe. Why? Because you can get absolutely massacred if you're not careful. And today, I mean, yeah, it wasn't the worst loss. It was just my free cash. Like all my positive investments will benefit if it comes back, but those Q calls that I bought are still low. They're like only about maybe $20 now above where they were. They're just not moving. I'm not confident enough to get back in. I do think that it's possible that we could have a rally or at least a comeback, but I'm so, I'm wounded right now. I need to take a little break. So let me see what I've been missing in chat, because I know I kind of dipped out for a little bit. So yeah, we were talking about triggering a rally, Salome Fishby, and he said he has the confidence of a cheater. Yeah, I don't know. Powell is. I think Powell is the chair mostly because he's good at coming off like not worried about stuff. You know what I mean? Like he has the ability to say whatever he wants with a straight face, and you'll take it as that's what he believes. I mean, it feels like that's what he believes. Who knows what he actually believes? But Powell's the fucking dude right now. Whatever you think about him, like he's doing his thing. He's better than I like him better than Ben Bernanke. Holy shit, man, Ben Bernanke was terrible. But Powell, like, no, I'm good with him being the Fed chair. I hope he stays the Fed chair for a while. Like Jay Powell's the dude for. I tried to make a little emote of him in Twitch, but they said you can't use like political figures and stuff, so I wasn't able to make a JPow emote because I just wanted to spam the screen with JPow's like farting face. I got that clip, by the way, if you haven't seen it, on pretty much any of my social medias, even here on Twitch. I have a clip of Jerome Powell just farting while he's talking about this. Nobody noticed it. I couldn't find it anywhere, but like you had to really up the volume because it was quiet, and like he makes this face, he makes like a gent face and he farts. Like nobody noticed that. I don't know how you didn't. I mean, I didn't when it was live, but when I was going back over the stuff, I was like, wait a minute, was that a fart? And I had to go back in and do that. So yeah, Jay Powell's the dude, man. Like I like to make fun of him. I like to listen to what he says. But at the same time, like I said, who the fuck knows who he is? I mean, he could be doing all kinds of crazy stuff. So yeah, Jerome Powell, crazy dude. So the data shows that there will be a rally, and he wants to put himself in the spot to get credit for it. That's a possibility, but I think that rally might be a little bit more delayed depending upon what happens for the rest of the year. Like I'm also looking at this price action right now. Look at this. I'm glad I didn't get back in, and I almost FOMO'd right here. Like when I saw this candle going up, I was like, shit, I need to jump in this thing because it might be going up to VWAP. But then I was looking at the price of the calls that I bought, and they really hadn't moved that much. That means the option market is not very confident that thing's going to jump up. So I thought, you know what? I took my hit today. I don't want to take two. I'm just going to go ahead and get out of it. It's about time. I've needed to humble myself with like how well I've done this year, and this past month has really done it. October was absolutely awful for me. Like it was just not my favorite. So let me keep going here. Let's see, Chef Brandon. Let's see, the hard part is we're going to have skewed jobs report due to the holiday temp stuff. Yes, that's going to be it. See, the holidays are going to throw everything into a mix, and they do know that to an extent. They're not going to be. It's not like they're dumb and they're like, oh, what's going on with the holidays? Everybody expects the holidays to boom, right? Especially like I think this year is going to surprise people a little bit because every time we come out with data, it's like the data's fine, right? Like in the stability of the country and the economy and all that stuff is what I mean. Like the underlying data is good. Basically, we have a good amount of jobs. And there's still money in the system. Things are dwindling, but it's not dead yet. So I think there's a possibility that some of that could move into the holiday season. Like right now, Facebook and Amazon are getting destroyed. Facebook, I love the fact that it's been beaten down so far. Like I own a little bit of Facebook. I added on this dip. Amazon, I own as well. Like all these companies that are destroyed right now are in like huge pain. I own those companies. I started buying those companies this year, and I don't have a lot of them, but now that they're down, I'd like to buy more. Although a bunch of my free cash is gone. Thank you, Jay Powell. Killing my calls like I knew you were going to do, man. That's just the way it goes. Okay, so this was an interesting day. This was a good learning experience. When you see a setup like this, this M right here, this to me is indicative of, I don't think we're going to have the rally that people think we're going to have. Like a really quick slam down like that tells me that and it's continuing to trend down. I mean, it's just today. Like we're going to have to process this for the next few days. And usually what happens is like things move around because people at first are like, oh, I don't know. And then they go, oh, no, this is great. And then, the rally kind of starts a little bit and they go, wait a minute, this doesn't seem, it's just this whole thing that continues. And oh man, I'm glad. What are these calls worth now that I'm out of it? Holy shit. Damn. They're down $100 from where I sold. Woo! That was lucky. Wow. Like I took a hit, but I could have taken a bigger hit than that. That's disgusting. Absolutely disgusting. Let's see, when I pull up my stuff here, I didn't actually get any of that today. So what we were waiting for was basically the 75 basis points. We got that. The 5% peak target. That's kind of the thing he threw into the mix. So he didn't say that the plan is exactly what it was. He said it's close to what it was, but that 5% peak for interest rates is now in question. So I have a feeling when we see more predictions, there's going to be predictions going up to 5.5, maybe even 6. And of course, there was the one person who asked the question about should the interest rates be at the rate of inflation? Like, should we jack interest rates up to 8 or 9% right now? Hell no. No. Why would you do that? Like if in the long run, like if inflation's insane and it doesn't come down, then they're going to have to do that. That's their tool, right? They have to continue to raise their rates and they have to sell off the assets that they can to pump supply in the market, get rid of the money. And that's what they're going to do. They're just going to run that into the ground until it either works or everything collapses. It's not going to collapse. We don't have the system that says it's going to collapse, right? The problem with these economies that collapse is they usually have warning signs coming up to it. Like it's not just the fact that their money becomes worthless and they're printing it out of like they're printing it insanely. It's also like, what is their job market doing? Do they still have companies that are producing things that are not just sold in their country but elsewhere? Do they have a trend of growth? Do they have a set of the population that's becoming so poor they can't afford food and they start to revolt, right? Like once you have stuff like that, you have a huge amount of people that are not being helped by the system and they would rather see it destroyed than actually help it. Then you have a problem, because it's not just the inflation. It's also what happens to the people at the bottom of the economy. Right. And right now, that's what he's talking about. He's like, all right, we can really only affect the big players, and the big players are the ones that set everything else for everybody else. So they're trying to make it so the big players don't hurt the little people as much as they were. But how can you actually fully do that, right? If you open a door for a company that wants to make money, you're giving them a chance to do something else, right? Like if you give them a bunch of money, yeah, they could hire people, but they could also buy back stock. They could also just sit on it. They could invest it in something, so there's so many different things that could happen if you with good intentions that you never really know. But at this point, it doesn't seem like our economy is going to be destroyed. All I do know is, like, from what I can see with the data and what it looks like around me, the market wants to rally. People are ready. They're waiting for a rally. We don't have so much hate for the market that, like, everybody's out. A lot of people are. The Fairweather fans are. Some of the middle of the road people are. But the hardcore people are staying in. They're sitting there. They're taking it. Like, if I was just starting this and I had experienced what I experienced today, I probably would quit the market. I mean, that loss is not common for me. I don't lose that much money very often because I don't usually put myself in a position where I can. So this is probably the worst loss I've had in a trade this year, right? So my cannabis positions and some of my other positions are down quite a bit, right? My trades have been good. I've made a good amount of money on these trades. I've transferred some of that into my stocks. Some of it I've taken out, but most of it I kind of left in the account, so that today I could destroy it by, buying calls that got murdered by JPOW. But geez, I am so glad I'm out of this. Wow, those calls are almost $300 below. Whoa, gee, this is fucked up, man. Like I really, even though it sucks, I got lucky. I could have been way, way, way down. I mean, my money could have been pretty much gone. These were not, all right, I didn't go out far enough in time. That was my other problem. I bought calls in the queues, which is what I usually do. I went out this month. I should have been out a couple of months, so I had at least some protection from the drop, because the time limit, or let's say the extrinsic value, what could happen to it in the time it has left, is still high when you go out. So when there's a big drop, yes, they're going to move. Delta does take everything down like it does closer, but you're not going to be destroyed by gamma. Now, gamma is the rate of change of delta, and delta is how much you make or lose per dollar movement in the stock. So if you have a delta of 50 and the stock goes up by $1, you've made $50 on that contract. Now, if you're close to expiring, gamma might say, okay, so next time instead of 50, you're going to get 80 or something, whatever. That's a little much. It's not going to be that much. But when your contracts are about to expire and they could be in the money all of a sudden, then suddenly there's a big risk to the people that sold it, or there's potential profit for the people that bought it. I, however, bought something just far enough out in time to where I wasn't getting too hit by gamma, but I was still being affected by the big movements in the stock. And now so I bought these calls in the 400s, and they are in the 100s right now. I got out of them in like the high 200s, maybe around 300, somewhere around there. But still, this is that's bad, man. That's really, really low. So this market is trending down. Everybody is unhappy about this. Well, I'm unhappy about this. It definitely was a learning experience. And the last thing I'm going to say before I take off for the day is the fact that this pattern shows you, this M pattern shows you the uncertainty. And it also shows you, like, you could call it a double top, right? But when you see like this movement right here, most of the people that were doing this were dumping during this. Because that's what you're seeing, and the volumes are similar, right? You had a huge volume here. That's where you had the most volume. And then when things came down, you had big volume as well. And this bounce was probably the shorts getting out, bulls getting, the bull trap, me deciding that I wasn't going to do anything when I should have just gotten out at break even, and I could have been fine. But now I've lost huge amount of my cash, which sucks. But when you already get so basically here's the point. Like I've been blabbing, and I'm kind of confused right now in my head. So the point is, when you're looking for a move and you get that move before you've actually entered the trade, it's probably not a good idea to jump in, right? Like get your move and get out if you're making a trade. Sometimes, yes, this thing trends up for the rest of the day. Maybe it'll recover tomorrow. But when I saw this candle, there was a part of me that was like, don't do it. You're done. This move is over. Like a sustained jump like this, if the candle came back down, I would have been so much more confident. But the fact that it's sustained, like you got the move and it's sustained, it's not a time to try to get the next leg up if you're in an environment that's this uncertain, which we are. Hopefully, Chef Brandon, if you're still here, you got that gold. That might be up. In fact, let's take a look at gold right now just to see what's... Oh, geez, you're getting murdered too. That sucks. Why is gold doing that? That's so dumb. That is so dumb. I'm going to get out of here. Hopefully, everybody had a better day than I did. I'll talk a little bit more about it this weekend and, probably be depressed throughout the week and think about not wanting to trade anymore and blah, 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 the normal thing. But I'm just going to get through it because that's what I do. And that's what you need to do is like, sometimes you take these hits. Have a good rest of your day. Stay safe. We'll talk about it this weekend. And yeah, that was a crappy one. See you later.